In this video, we're going to continue with this example of the ABC company and prepare a balance sheet for year 2. This is a long problem because we are doing all the 4 different financial statements. So it would be great for you to rework these problems later without looking at the answer so you do understand everything that we're doing in these videos. For a balance sheet, just like all the other statements, you start off with the header information. So we start with the name of the company, ABC Company. Next is the name of the statement. So this is the balance sheet. And finally, the date. So this is a point in time statement. So we're just going to say December 31st, year 2. If you've forgotten the format of your balance sheet, please refer to the previous video, or you can refer to your textbook that has a copy of what the balance sheet looks like. The first thing that we put in the balance sheet are your assets. So let's label this assets. And let's see what are the assets we had for the end of year 2. On December 31st, year 2, the only asset we had was cash, and we had $171,000 of cash. So that's what we're going to put in our balance sheet. Cash, $171,000. And then, since we have no other assets, this would be our total assets. Next, we list our liabilities. We only have one liability, notes payable, and the balance on December 31st is $50,000. So let's go ahead and put that. And that's the only liability we have. So next section is stockholders' equity. Stockholders' equity has 2 things, common stock and retained earnings. Let's always list common stock first. Common stock had an ending balance of $98,000. Now you see it here, but I do want to show you that typically we would be getting that information from the statement of changes in stockholders' equity. Our ending common stock on December 31st is $98,000, and this number is really where we get your common stock to prepare your balance sheet. Later on, when we look at ending retained earnings, again, retained earnings of $23,000 will be what we're going to use, and that number comes from the statement of changes in stockholders' equity. So let's go ahead and put $98,000 down for common stock. And I'm going to indent that because we have 2 things here. And then the next one's retained earnings. And retained earnings are 23. We can see that here, but if you don't have the transaction analysis in front of you, you can go to your statement of changes in stockholders' equity and get that number. So the 23,000 is from the statement of changes in stockholders' equity. It's this number here. And that's the number that gets transferred to the balance sheet. So let's put 23,000 here. That gives you total stockholders' equity, which is equal to 121,000. That gives you total liabilities and stockholders' equity, equal to 50,000 plus 121,000 equals 171,000. We know we did our balance sheet correctly because our total assets are now equal to total liabilities and stockholders' equity. Again, to recap the balance sheet, the common stock, retained earnings, and total stockholders' equity dollar amounts for the balance sheet are available from the statement of changes in stockholders' equity. We prepare a statement of changes in stockholders' equity as a second financial statement, and from that we get the information we need to prepare the third financial statement, which is the balance sheet. That's it for this video. We're going to look at the statement of cash flows next.